Hey now, I'm back with another trading system review. What happens when we take the strategy from this extremely popular video and test it for 100 trades? After a review of the test data, I am going to share my thoughts on improving this system's profitability. Just remember, even if you are a superhero, there is still plenty to learn by subscribing.
I'm Spider-Man.
I call this system the two-step, and like most trading systems, it can be adapted to Forex, crypto, options, stocks, indices, or any instrument that has significant volume and market participants. This trading strategy utilizes one free TradingView indicator. As always, the link and settings to the indicator is listed in the description below. The first indicator are the ATR bands. I am going to set the upper and lower multiplier at 2 and color the bands in white. The average true range is a Wilder indicator, and at default settings, calculates the absolute value of the previous 14 bars expressed as a moving average. This study will provide our stop-loss levels on each setup. Let's go over entry criteria and review some examples. As always, system rules and details are listed in the description. This chart is Microsoft 15-minute and 5-minute candles. The rules to enter along on the two-step are: first, on the higher time frame, and in this case, the 15-minute chart, we are looking for a clear uptrend characterized by higher highs and higher lows. Second, on the higher time frame still, we are looking for a pullback into support. Third, on the lower time frame, we want to see a price rejection expressed as a wick. The next rule requires a bullish candle to close on the lower time frame. Our rules are met when this candle closes. That is our trigger candle. We place our stop at 2 times the ATR at the lowest level of the pullback and target 2 times risk. And this example continues the trend and hits the target. If you enjoy this content, make sure to click the like button. I have one more long example. First, we have a clear uptrend signified by a series of higher highs and higher lows. Second, on the higher time frame, there is a pullback into a previous level of support. Next, on the lower time frame, there is a rejection wick and a bullish candle. When the bullish candle closes, it becomes our trigger. The stop is placed at 2 times the ATR of the lowest candle in the pullback, and 1 to 2 is our target. And after another pullback, this example hits the target. Now we flip to shorts. This is what I will test for shorts. First, on the higher time frame, we are looking for a downtrend characterized by a series of lower highs and lower lows in price. The second thing we are looking for on the higher time frame is a pullback into previous resistance. On the lower time frame, we are looking for a rejection wick. The final rule requires a bearish candle to be printed on the lower time frame. All of that happens on this candle here. That is our trigger candle. The stop is placed at 2 times the ATR of the highest candle in the pullback, and the target is set for 2 times risk. And this short hits the profit target. I'm going to show you one more quick short example. First, we can see a clear downtrend on the 15-minute time frame. Second, there is a pullback into resistance. Next, there is a nice rejection wick at the resistance level. Finally, a bearish candle closes. This is our trigger candle. The stop is placed at 2 times the ATR of the highest candle on the pullback, and our target is 2 times risk. And this instrument gaps down to the target. I'm going to share some great ideas on how we can improve this system along with a trader's landing score. And now it's time to do what I do. If you enjoy this content, hit the like button. Remember, this is just 102 tests on 3 instruments. If you are thinking of using this system, please do extensive back and forward testing, and be sure to let our community know what you discover. This test was done on a combination of high volume instruments, specifically the Euro versus the US dollar, Bitcoin versus the US dollar, and Microsoft. The combined results are inclusive of 102 setups over 12 plus months. Most consecutive winning trades came in at 6, and the most consecutive losses turned out to be 5. The win rate was just under 60%, and the combined maximum drawdown turned out to be 5.21%. The inclusive profit factor came in at a very healthy 2.98, and the total gain on account was a nice 162% gross, risking 2% per position. Something to note was an outlier on Microsoft, which had an amazing profit factor of 4. This could portend a certain system compatibility with equities, but clearly more testing is needed. The equity curve here further illustrates my previous point about the profit factor. The volatility of Bitcoin during this testing period seems to have caused a more dramatic drawdown in the equity curve, specifically more than 7.5%, which is almost double the other two instruments. This point should be further examined with more data. What score would you give this strategy? Log on to the community site and let's discuss. I give this system a Trader's Lightning score of 8 because this system takes full advantage of a trending market, accounts for king market structure, and gives a great starting point to develop a system with plenty of headroom for improvement. Remember, the enemy of great is good. I have 6 ideas on how we can improve this system. First, there are different ways to enter the market. The way that I tested this is really the most basic. What Steven mentions in the original video is to enter on a double top or double bottom. On this chart, we can see the bounce off support, and then we would enter on the second bounce off of that support level, which would be considered a double bottom. Another way to enter on the lower time frame is to use Williams fractals, which adds another element of price action into the system. And yet another, and perhaps a more trendy way to enter, would be to wait for the super trend to confirm the trend change on the lower time frame. The next item you can add is hidden divergence on an oscillator like the RSI. On the higher time frame, we can see a lower low on the RSI and a higher low on price. This is hidden divergence and portends a trend continuation. In addition, when going down on the smaller time frames, regular divergence can forecast a change in the short-term trend, and thus a continuation of the higher time frame trend. Here we can see a higher low on the RSI and a lower low on price, which indicates a weakening of bearish momentum. Furthermore, you can combine tips 2 and 3, looking out for hidden divergence on the higher time frame and then regular divergence on the lower time frames. This double confirmation can be a powerful entry signal. Additionally, you can combine more time frames to better match your trading style. Some of the time frames that match up well in this system are inclusive of what I tested, which was the 15-minute and 5-minute, but you can also move up to the 1 hour and 15-minute, or the 4 hour and 1 hour, or even the daily and 4 hour. Generally speaking, the higher time frame combination you choose, the better your win rate will be because there will be less market noise. Another item you can add on the lower time frame to increase your win rate is volume. You can see that all of the volume spikes here coincided with a trend continuation. If you want to support this channel and the work I'm doing here, in addition to connecting with some like-minded traders, I encourage you to check out our community site where we are discussing all things trading. And have a great day, because you deserve it.